Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Well, cheers to another green trading day, retail trading team. I just did an entire video with my mic muted, as we do make the technical errors when we're coming to you live from Puppet Show South. But we're going to go again here, and this is your routine briefing. So I ask your forgiveness for missing out on the past few days here. I am sometimes unavailable and difficult to be routined, as they say when I'm at Puppet Show South here. But we're going to have a video for you today and then one more tomorrow to make up for that lost time. So thank you for joining me, and we're going to go ahead and jump right into it. I'm going to do a sound check first. I'll make sure we got that going on here. There we go. Okay, so the sound's good, and we are ready to jump right in here. So I'm going to just kind of go real quickly through these slides at the beginning of the video here, and by going through them quickly, I'm not even going to read them to you, just because I took a snapshot of them, and I think it's easiest for you to just kind of go to these slides and look at them yourself. So those slides are available, as with everything else, in that routine trading folder in the description of this video. And I pulled these from Tier 1 Alpha. I think they're an excellent source for macro information, and that's where these come from every day. So if you want to look at them, read them, and try to stare at them a little bit, figure out what you make of it, those are going to be available, like I said, in that routine trading folder. So I'm just going to go right through them. Like I said, I'm not going to read them to you because nobody likes a slideshow where you just read what's on the screen. Yet if you want to see these yourself, you can go check them out in that folder. So a lot of interesting stuff here, some stuff that I was personally surprised about, and we will see if it plays out. So I would say that these are pretty bearish. I'm just a price action guy that's supporting these briefings, so I'm not going to prognosticate for the future, yet these are definitely interesting and worth your time to check out. So I'll let you do that, and we're going to jump into the price action and routine trading side of things besides that. So we're going to go ahead and start with the warm-up document for today, which you can also find in the description of this video. Everything's in the description of this video. That's how we keep it nice and simple here at Routine Trading South, or Puppet Show South, rather, I believe is the correct name for our location. So as you can see, the levels for today are going to be those highlighted ones. 412, by the way, on the SPY is another level. I put that in a little bit later. That's just where the POC is, and you'll see how that's important as we move forward in the briefing. Yet this document stays updated throughout the day if and when anything changes, and hopefully you find it useful. So that is the warm-up document there. I'm going to come back to it a couple times in the briefing just to discuss a few of the volume profile aspects that we have going on here. And we're going to start with this weekly chart. So first thing in the weekly chart, the major levels are going to be that 410, way below 410 to 412, like I said, is I think the nice bounce spot if we do get any type of extended pullback, and you also see that as we look at the TPO chart why. But really the main thing is we are testing the top side of the value area high coming from the overall market high from the, I believe, January 2022, or the end of 2021. Pretty sure it's January 2022. That's where that's drawn from. This is super important. This is the first test of that area. And as you can see, what usually happens if you go to number 2 there on the volume profile is we tend to test it, come back and either bounce, so look at number 4 off that POC, or move lower. So that POC is going to be really important if and when we do get any type of extended pullback, and that's kind of what I'm watching there. Just a couple other things on this chart. We are currently consolidating above that 4 sigma VWAP, so we are still overextended on the large scale, big picture price action side of things, in my opinion. And so we'll see if we can hold that. So the immediate next stop, I think, if we continue to squeeze, is going to be the underside of that October 13th trend line, which you can see in the left of this photo. And it's really more evident if we go to the daily chart here. So that's going to be somewhere around 435, 432, depending on how long we consolidate. If we do continue moving higher, yet really those major levels we're watching on the SPY on a shorter term here, that 426 for that potential break lower, and then 430, which is just that high that we put in earlier in the week. So that's what we're going to be watching there. And again, if we do get that pullback, I'm watching what happens around that 412 area. So besides that, we do have a gap at 423 waiting to be addressed. On the SPY chart here, you can see that 4 sigma VWAP is also right around that 423 area. So once we do lose 426, I think 423 is going to be the next potential major support for our friends, the bulls, or potentially, obviously, we can keep going through it and, like I said, go retest all the way down at that 412 area. And the way that it looks on the TPO, why I'm so focused on that as I drew this ellipse here, is you have a lot of ugly structure below that 4250 area. So we have a naked POC at 4250 on ES, a potential bounce spot there. Yet if we do keep going through, you have multiple singles, multiple additional untested or naked POCs, a poor low, and just a lot of junk to potentially clean up on the way to 412 if we do get that type of pullback. So are we going to get a pullback before testing the other side of that trend line, or even ever? That I cannot say, yet there's plenty of structure to clean up if that does occur, and you can see those levels there as well. Yet we're not seeing anything in volatility suggesting that we're going to keep doing anything but consolidating and or going higher until, in my opinion, we recover at least that 1440 area. You can see that we've been in free fall since breaking that descending triangle you can see above here. And in fact, we are testing the underside of yet another descending triangle or wedge, one of those two on volatility here. So until 1540 recovers, or we get a much larger move lower, and then we'll get different levels. Again, I think the bulls are in charge, and we don't need to look for any extended pullback because volatility is in free fall. As one of my friends say, the volatility ETF itself seems to be going bankrupt, so we'll see if that holds. We'll see if we end up in the singles of the VIX. Yet, as we're just kind of trading this day to day, that first level we're looking for is 1440, and as we break above that and potentially even break above this descending wedge and or triangle, whatever it's called, that next area is going to be that 17 area in the /VX. So pretty simple. Pretty short and sweet in the price action front. Again, I encourage you to go check out those slides that we have in the beginning of this slideshow here. I think those are pretty helpful for potentially informing your macro narrative. So just a real quick review of my trades today. Very straightforward. Again, my routine day trading strategy is in that folder in that description of this video as well. And the strategy that I'm working on here as I continue back testing this along with Fabio is called SIT, so SIT, future strategy. Very straightforward, and today was a very mechanical day. You had that nice recovery of the low, that nice hammer candle, and then you had 2 additional adds before eventually getting trailed out at about 1120 at that 84.25 area when price did break below that doji. So this is a 15-minute chart, and it was a very straightforward and easy day, so nothing really too much to talk about. Like I said, if you're interested in those mechanics, you can find them in that routine day trading document. So I'm going to go ahead and push out the newsletter here. That's going to package everything together, links to the slide, the most up-to-date image of that warm-up document, which I'll keep updated if it becomes necessary throughout the day and into tomorrow. So besides that, if you found any of this information useful, and if you go review those slides and find them mind-blowing useful as well, I'd appreciate a thumbs up on this video. That does help with the YouTube algorithm and our quest to hold above double-digit views on these briefings. So I appreciate any help on that front. And besides that, I also appreciate any engagement in the comment section of this video, or you can find me on Twitter at Routine Trader. So regardless, I thank you for your attention. I will see you tomorrow for another briefing to close out the week. Stay classy until then.